Mark the Meerkat here with a double trade of the day. That's right, two trades we're going to show you today from the Grok day trading chat room. It was on DGAZ. Here it is in pre-market, and look at that. It was falling down a tremendous amount. Now, what is DGAZ? It is the bearish ETF on natural gas. So as natural gas is going up, this one is going down, and it is a leveraged ETF. So that's what we were playing. It was actually playing better than UGAS, which is the bullish ETF on natural gas. So here it was low basing down here. If you want to know more about a low base, you can go to our site, freeonlinetradingeducation.com, and go right up here to the top where it says Chart School. Hit on that. And then we have different chart patterns here. And one we're going to talk about today is low base. That's the first one we want to talk about, where a stock runs down here. It's running on a line of support. If it breaks below that, the odds are in our favor, and we want to go short. Here's some examples of it from day charts, which is each one of these is a 1 day. Here was low basing that's set up there. Look at that. Bam, fell down, bam, fell down there. I'm going to show it to you on a 1 minute day trading chart here, and here it is, the low basing right down here. So I'm going to set my trade right down here and let the market come to me. Let's see what happened next here, and what happened. Bam, there it's falling down right there. Bam, I'm now in right here at $9.21. I am short on DGAZ DGAS. So let's bring a stop right down here, right above that line, which was support, could now be resistance, to protect myself there. And as we get into the trade at about 1% stop, and it's starting to go down here, and now it's right at the even dollar amount, $9, and it's basing there, stalling down. Now, I have a day trading rule that if it stalls at a major line of support or resistance, I take out half, and then change my stop on the second half. So I went ahead and I took out half here right at $9 for 2.3% on that first half. And now I'm going to bring my stop down here on the second half here, right to where the 8 EMA is, this thin red line, and at $9.11. Now that's in the money, zero-ish trade, and I've got a guaranteed income trade. Love it when that happens. Starting to move up here now, hitting its head on that 8 EMA, rolling back down again. But now the 8 EMA has moved down. I'm moving it down as well here, and now we're starting to get some support, a support line here. And what happens is it's still going by, and then boom, it popped up right here at the 20 moving average. Got my stop ready to go, and pops out, and I'm out at $9.07 on the second half for 1.5%. So let's look at this total first trade. It was a low base, broke down. I followed my rule that when it hit a major line of support, $9 even dollar amount in this case, I took out half, and then I was managing my stop, and when it broke above the 20 moving average, I was out on the second half. So this total trade was for 1.9% in 20 minutes. But let's see what happened next year. Again, very bearish. It was still going down. Again, this is a bearish ETF, so that means that the price of natural gas kept on going up here. And look at that, fell down. I wasn't ready to go short when it broke that $9 mark, so I missed that part, but maybe I'll get another opportunity for a high probability setup. And sure enough, it's now forming a symmetrical triangle. You can go back to that chart school and take a look at symmetrical triangle and read about that, which means it could go either way. It's either bullish or bearish. So I set a trade up here up above, and I set a trade down below. Let the market come to me, and what happened? Bam, it fell down, and now I am short at $8.87 on DGAZ, DGAZ. Got to bring a stop down here just above this. See, on the symmetrical triangle, the apex can be a possible line of support and resistance, and the 20 moving average. So I'm putting my stop right there, and we're less than 1%. And let's see what happened after that. Watch what happened. It fell down here, started to get support here right at 75, and look at that. Bam, bam, bam. Fell down here, now popping, and now it's at 65 and starting to base. And so I went ahead, and it kept hitting its head at 70. I went ahead and I took out half at 70, again following my rule that if it is stalled, I'd take out half, and I took it out at 876 for 1.2% on the first half. And let's see what happened after that. Look at that. Kabam! Look at that fall down all the way down here to 845, and it's still going to now bringing my second half stop down here. Now at the 860, just above this 8 EMA here. getting way overextended down here. Look at that. Look at that falling down, 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 and again fell over here to 816, new low a day, started to come back up, and I'm following this 8 EMA down here, but now starting to come back up. So right around the 839 area is where I had my stop, and ready to go, and boom, look at that, just blew up above this 840 area, and that's actually where it actually filled me with at $8.40 for 5.3% on the second half. So again, look at this total second trade with symmetrical triangle. It dropped down and then it just kept on falling. When it stalled at a major line of support and resistance, I took out half, and then it fell, managing my stop. When it broke above the 8 EMA in this case, I went ahead and it got out. Total trade 3.3% in 27 minutes. Now, these two trades may sound very similar. Why? Because I'm following my trading rules. I am staying disciplined. Whether it's going in my favor or not, I trade the same rules while I trade. So these two trades combined together was for 5.2%. And this was just 2 of 10 trades that I did today in the Grok day trading chat room. These are the ones that I called for everyone they could have gotten into them and managed them on their own then. But I'm telling them what I'm doing along the way. So here for the day here we had 10 trades. You know, I had one break-even trade here on trade number 3. I just went over trade number 6 here for the 1.9%, and then trade number 10 here was a second trade that I talked about. And we had other ones in between. So for the day, I was at 7 out of 10 trades for 70% success rate, and then we netted at 12.3%. Now that's net of on our risk, which would be if our model portfolio is that you trade $10,000 per trade, and you put a 1% stop. That's risking $100 per trade. But for every 1% we make on that risk, that would be $100. So we made about $1,200 here today in the first 2 hours of the market. Like to join us, just go to groktrade.com to the chat room tab, and you can learn how to join us if you'd like. So this is Mark the Meerkat. Hey, let's talk about wealth for a minute. Truett Cathy, who is the founder of Chick-fil-A, he wrote a book called Wealth, Is It Worth It? And he had 4 key things about wealth that would make it worth it. He said, number 1, you have to earn it honestly. 2, spend it wisely. 3, you have to save responsibly. And 4, you need to give generously. If you do that, then yes, wealth is worth it. Mark the Meerkat, trade well, and may your winners run.